I think we may get some. We're going to get earnings slowdown, but I think those numbers are backward looking. And if we see anything coming out of China positively in terms of global growth, we're going to start to see things reaccelerate. So I would disagree slightly. I mean, that will also bring Germany out of the doldrums. So I think part of this is because those numbers are looking backwards and stocks are sniffing out stronger global growth. Just look at what's outperforming this year.
And Paula, this is exactly what I wanted to ask you about. You know, we mentioned this yesterday, but the MSCI World Index is at something like a 4-month high with all of this going on. What explains that?
Well, you've had some good news coming out of the U.S. China trade negotiations. That helps a lot. And the Chinese have really been trying to pull out all the stops on stimulus. The problem is it's not the same kind of stimulus they used in 15 and 16. They're trying to stimulate small and medium-sized private enterprises, and that's a lot more like herding cats than it is if you just tell some government-run companies to spend a lot of money and borrow a lot of money. It's going to take a little bit longer in China, but we agree with Nancy. You will get, we think, an uptick in global growth for the second half of this year. Markets should begin to see that soon, and we do think that, you know, in the meantime, things could get a little rocky here.
Sure.
But we do look for prices to be higher in the end of the year.
So both of you, when I'm asking about the U.S. or Europe, you're bringing it back to China.
Yeah.
Nancy, you still have stocks here in the U.S. that you like. A lot of them, I notice, are in the tech sector.
Yes.
You worried about that exposure?
No, I mean, we're valuation driven. So we're buying the stocks that are at the lower end of the valuation. We got a chance in December to go into things like Broadcom and Salesforce.com and add to some of our other holdings. We actually bottom ticked Apple in January, just rounding out our holding. So I think these are stocks you want to hold for the next 3 to 5 years. Earnings plus the valuation levels that we're seeing are not out of line. I mean, and the growth is going to slow, but not materially.
What do you have priced in for the Fed right now? What do you guys think they're going to do in terms of the rest of the year?
I think you get another hike. I think the market is misreading that, and that there will be a surprise initially, some negative volatility, but I do think you get another hike because I don't think the economy is as dire as these recent numbers show.
And Paul, even the jobless claims series here this morning is still, it's hanging in there. You know, this is like and I understand that, you know, the recession might be close by the time that thing picks up, and it starts to sound like we're explaining a lot of this away, but there's not yet evidence that the pace of layoffs is picking up, that anything like that is happening in the U.S. So what do you think happens with the Fed now?
Yeah, that's right. We agree with Nancy. We think you'll see at least one rate hike going forward, but probably not very soon, maybe at the earliest mid-year, and probably more likely towards the end part of the year when, after all, that's when we're expecting the growth numbers to look a little bit more reassuring for the markets.
Should investors stay in U.S. stocks, Paul?
Yes. In fact, we like cyclicals right now. We like large caps right now. We even like emerging market stocks right now. But in that cyclicals area, we like industrials, consumer discretionary, and we went overweight on tech in November.
Also, Nancy, want to mention in terms of the good news, there is good news. We just learned that U.S. oil production hit 12 million barrels a day for the first time in the weekly report. It's crazy. It's up from 10 probably just a year ago. You like a couple of energy names.
Yeah.
Tell us why.
Because Marathon is highly leveraged to the price of oil, and if we do see resurgent growth globally, then we will see oil prices coming back, and they already have, obviously. And then we just like the exposure, the cyclical exposure that you get. Similar to what Paul just said, we're overweight the industrials as well. So, there's a bet here that things are not as bad as they look. And we're also betting on the fact that we've never gone into a recession at a 25 basis point real Fed funds rate. Usually it's closer to 2. So we think even if you get another hike this year, we have some room to go in this rally.
And Paul, also speaking of some of the sensitive high-frequency data, the jobless claims I mentioned were good this morning. We also, yesterday, were talking about the semiconductors being on a win streak, and we've been talking about the price of copper and other metals being at a high as well. Is that telling us that the growth concerns are overdone?
We do think the growth concerns are overdone, and yes, we are looking for commodity prices to come up as the year progresses.
All right. Well, we'll leave it on that.
We'll see.
We get a bunch of bad data. Everything seems fine talking to you guys until the jobless claims tell us otherwise. Thank you both very much.